The crude oil market saw a good start to 2019 with both Brent and WTI gaining by around 50% apiece. However, since the highs towards the end of April, there's been some consolidation. Where now? And is it more likely that we'll see the October 2018 highs hit, or that oil will move down to where it was at the start of this year? Malcolm Graham-Wood joins us from MalcysBlog.com. Malcolm, good to see you.
Yeah, nice to see you.
So firstly, could you just remind us about what was driving that 50% rise in the first 4 months of the year?
Yeah, the oil price actually had a big fall at the end of last year. No specific reasons, but the driving force behind oil is effectively what the production is from OPEC, or now OPEC plus, with i.e. so the OPEC people plus Russia and one or two others. And with the oil price running up, they got a bit carried away. Their numbers, their quotas were ignored as they thought that they were going to get away with it. The oil price went up to $85 at one stage for Brent, and production increased. And so what happened was that the market suddenly saw production increasing. And the other thing was that that the US had said that they were going to put sanctions on Iran, which also made people think, oh, there's going to be another shortage of oil. But two things happened. First of all, the market took that into account very early, and the people, in particular Saudi Arabia, Abu Dhabi, Kuwait, had all said that they would increase production to make up for it in a deal with the US. Once they'd done that, there was a lot of oil around. And then, of course, the US, Washington came out with more waivers than they thought. Countries like India and China and Turkey were given another 6 months to cut back their production.
So it's those geopolitical factors really that's driving the pullback. Let's have a quick check on the chart. This is US crude WTI. We can see that sharp slump before the turn of the year, then the pickup above the 61.8% retracement level, and then the decline once again. So what is it really? Is it those geopolitical factors that means that we've seen a pullback since those recent highs?
Yes, I mean, primarily Venezuela has probably been one of the key ones there. Venezuela has come back to less than 1 million barrels a day, and people expect that to continue. It's not going to change dramatically. And you've also got different types and blends of oil, so different countries you can't just say I'll move to a different type of crude and so on. And of course Iran, one of the reasons for the uplift in the price was that the Americans decided to cancel those waivers with effect from now.
So how much potential do you think that spat between the US and Iran has to disrupt oil supply?
Well, it has already disrupted it. I mean, it's got to the stage now. I expect Iran to be exporting 500,000 barrels a day, maybe a bit more, but certainly not 1 million barrels a day, and certainly not the 2.5 million barrels a day that they could. The underlying supply and demand in OPEC is about in line at the moment with all the major OPEC plus characters, including Russia, having cut back to their quotas. There's some very rough numbers, but the demand for OPEC crude is just under 31 million barrels a day, and I reckon they're producing 30.5 million barrels a day. And in what is quite a tight second and third quarter, if nothing else changes, then the oil price is in what I would call a stable, slightly upward moving position, and especially now since it's come off sort of $8 from the top. And the main reason for that, of course, is that in the last few weeks, markets in general have gone into risk-off mode because of the China-US trade talks, which are meant to be, when people was expecting to be sorted some time ago. There's a dinner in Washington tomorrow night, I think it is, between where the Chinese are attending and having dinner with Trump. I think quite a lot of this is rhetoric in terms of what Trump is saying. But no one likes to see that. So when you have risk off in commodities, that's what happens. But my guess is that in terms of fundamental supply and demand, the market's in quite a good place at $65, $70.
In terms of the demand side, though, is there a risk, though, that the global growth outlook could weaken and that could dampen demand?
Yeah, no doubt. I mean, we've seen a number of the reporting companies saying GDP is down in in Europe. There's no doubt about that. It's down in the rest of the world. China apparently is, 6 rather than 6.5 or anything like that. But I still see, very, very substantial oil import growth from China. India is not losing any of its demand for oil either, to be honest. And in the States, I mean, from a non-expert, as far as I'm aware, you judge what's going on there by two things. One is interest rates, and the Fed certainly aren't, they haven't cut interest rates to say that they think the market's in trouble. And the other is in gasoline prices, and that's not in gasoline prices because of what OPEC or Saudi Arabia does, because, the US can produce 12.5 million barrels a day themselves. People in the States are still driving huge amounts. And whether you say, it's because, there's no fossil fuel narrative here. The Americans drive 350 billion miles every month.
Wow. The
average age of a car in the US of A is 18 years old. So, the change in terms of electric cars, less demand for oil. Yeah. So, the gasoline price is up at 380 a gallon, and you can't blame the Saudis for that. The bottom line is that I don't see a huge GDP effect. If there was no change in worldwide GDP at all year on year, demand for oil and gas, oil goes up by about 1.6 million barrels a day on its own. That isn't changing because of climate change or fossil fuel or anything else. It'll come down a bit in due course, but it doesn't change dramatically. So, at the moment, I think the market is stable. When it got, when I was looking at Brent at 65, 70, I thought I don't see it going back up to 85. I just see it being relatively stable, and I think, in terms of what OPEC and the Saudis and the Kuwaitis and so on, and I've come back from Kuwait recently, where they are very positive on the long term for demand for their crude. They don't mind cutting back production a little bit in the short term because they still see long-term demand.
So on OPEC, what should we be expecting from that June meeting? Could that be a pivotal point for the oil price? And also, what's your kind of temperature on the relationship between OPEC and non-OPEC right now, and most notably Russia, of course?
Okay, well, they do have meetings twice a year, formal meetings to discuss things, but they have informal meetings all the time, and they have meetings, and more importantly, they have all these famous committees where they talk about the oil price and everything else. The most important thing for the 26th of June meeting is the discussion about the quotas. Will they continue them at the same level? One or two people are saying they should release a little, because if the oil price has been high, then. But I think they will probably continue them at the same level as before. Second part of the question is probably more difficult, because people are always happy to say the relationship between Russia and the Saudis, which is the sort of key element in all this, is under pressure, and I don't think it happens. I mean, there are always people who don't understand why, when OPEC say, at Christmas time, they said, we need to get the oil price back up again, so we're all cutting. Now, if you go to Kuwait or Saudi Arabia or Abu Dhabi, you can cut it almost immediately. But it doesn't work like that in Russia, apart from the fact that the instructions have got to go all the way down to the local level. And in the middle of winter, they can't reduce, but they have reduced. They're back at their quota now, pretty much.
So it's not being difficult.
I don't see it as being a problem. Sometimes it's a lag. Sometimes, which gives the impression of them being difficult, and to a certain extent that. Saudi Arabia in particular know that they can overcompensate by that. We knew that Saudi Arabia went down to below 10 million barrels a day at one stage earlier in the year. You asked why the oil price went up so much, is that Saudis were the people who pulled, switched off the taps quickest and by the most, because at one stage last year we were talking about them producing 12.5 million barrels a day, and now they're producing 10. So they take into account what the demand is.
And in terms of the Saudis, the Aramco IPO, do you see that happening?
I don't see the Aramco IPO happening this year, but I do, because I thought that I thought people were running way ahead of themselves in terms of saying we're going to have a 2 or 3 trillion market cap vehicle around the world somewhere. I always thought that Aramco would look for investment in different ways. I actually didn't see the bond happening, but that's no reason. I actually thought that they're hardly going to go around the city of London doing a roadshow asking Legal and General or BlackRock, would you like to put in X trillion into this? No, I mean, the people who are going to invest in Aramco are the Chinese or the Indians and say, in order to cut a deal for long-term significant protected production, we will buy, a 10, 20, $50 billion worth of Aramco. But the other thing is that there's no doubt that that the powers that be in Saudi Arabia are trying to make Saudi Aramco, as well as all the other parts of the economy, more visible and more obviously. People can actually see what happens in Aramco. And because to do the deals that they've done, even the bond deal, they've had to open up the balance sheet and show the world some of their assets.
And very, very finally, year-end target on Brent and WTI.
Well, I would say that at the moment, if we go through the second and third quarter satisfactorily, and I'm saying that there'll be about a $10 differential. Sometimes it's a bit less, about $8 today. So I'm working off Brent. I'd say it won't go above 80. And it won't go below 65. Now that's a broad range, but at the moment I would say $70 to $75 is an achievable rate for Brent for the foreseeable future.
So not too exciting a year for oil compared to some previous.
Well, it's pretty exciting. Sort of 3 years ago, in February it was 29, and then it got to 85, and.
But not $100 oil.
I don't think so.
All right, Malky, thank you so much.
Pleasure.
That was Malcolm Grahamwood from MalcysBlog.com. I'm Victoria Scholar, and thanks for watching IGTV.